Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Tuesday, March 28th, 2023. Before I click through all the charts, please click like and subscribe. Helps us out a great deal. Check out wickedstocks.com, where just like the daily Tesla and daily Apple reports, we put out daily Triple Q, daily SPY, that is the NASDAQ 100, the S&P 500 ETFs, 2 individual stock picks a week, just like these daily videos. In fact, on Monday, we put out General Motors. You might want to check that stock out. It's approaching a significant level as we speak. And so there you have it. So let's jump into the charts itself for Tesla. We came off of an early January that 65.92 to 77.62, a band of channel support. On the way up, we were wrong chart. On the way up, we are anticipating potential containment in the band of channel support that was then resistance. Now at 144.67 to 152.78. That red arrow did not happen. What did happen was the market on a positive earnings closed a week above this formation, then setting up a 2 to 3 month buy signal at 235.23, which still remains in effect. Still anticipating 235.23. We've got a little less than a month for that to play out. I'm not sure if that'll happen or not, but that's where we're at. And in fact, let's jump to this chart here. So this chart is the daily chart. 180.62 became a 2 to 3 week target about a month ago when we settled below the 209.51 channel bottom. We tested the 180.62 speed line. It has held selling pressures, presumably into April trade. That's just to say that we do not violate it this week. And above which, we've got some meaningful levels that you can see here. For the week, I've got 209.51. That former channel bottom is a 2-star resistance. I do have 221.25. That's a long-term Fibonacci, but really it's that 235.23 holding above 180.62 will keep 235.23 in reach by the end of April, and that is pretty much in that 2 to 3 month time frame. And that is sort of the bigger picture dynamic. So I don't know if we'll see any of these levels on this chart today. We might test 180.62, and that would become indicated if we actually break or open today below 187.36, which is this former descending 2/3 speed line we settled above about a week ago. Yes, we've certainly tested it, slipped through it on an intraday basis. We've not really closed below it. I think about 4 days ago we closed just below it, but it was too close to call. 187.36. This is for day traders, able to contain session weakness. And you could also say that holding above 187.36 will keep this 209.51 former channel bottom in reach over the next 3 to 5 days. On an intraday basis, I do have to the upside, a 200.66, and that is nothing more than last week's high. It can contain intraday strength, above which the 209.51 channel bottom, I think, is likely by the closing bell if we push or open today above 200.66. So that is the upside day trade. The downside day trade is below 193.39. This is a new rising channel bottom over the last couple of weeks, breaking 193.31, 193.39. Expect the 187.36 speed line on an intraday basis, where once again we can bottom out for the day, possibly into later week. These two speed lines all come together over the next few days. If we do break 187.36, we could test 180.62 intraday. I think the likelier outcome is a settlement today below 187.36, indicating 180.62 tomorrow. I'm not saying that I expect a settlement today below 187.36. What I am saying is that if 180.62 is to be tested over the next few days, I think it'll require a settlement today anyway, below 187.36. 180.62, still good bottom picking territory, as I'd mentioned a couple of weeks ago when we tested it in the middle of March. And if we test 180.62, you could perhaps reach for 230, 235 out of the money calls that don't expire for at least a month. You might go several months out or more just to preserve delta on the way up and reduce the theta value or the time decay element. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wicketstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Now, if we were over the coming few days, over the coming week, to close below 180.62, just the opposite. If you bought those 230 or 235 out of the money calls, you may liquidate them and then reach for 145 out of the money puts. With a few things going on, you've got a 5/8 downside Fibonacci from the January low against the February high. That is one. We also have this former channel structure that I mentioned at the top of the video. On the daily chart, presently 145.33 to 145.73. So bottom line, if we close below 180.62, which you can see here on the far right, 2 to 3 week sell signal into the mid 140s, and that would become the objective, would be 146.06 if we close today, for instance, below 180.62. Until then, this is bottom picking territory into April trade. Once tested, 209.51 in reach within 1 to 2 weeks, 235.23 within 3 to 5 weeks. And of course, on the way up, there's likely to be hesitation once again at the 221 and a quarter long-term Fibonacci. That's a 3/8 from A, the all-time November 21 high, against B, the January 23 low. I'm trying to think if there's anything else that needs to be said. All the minor points have been carefully chosen. I did mention earlier how, if we break 193.39, 187.36 in reach, that is a day trade level. If we open at or above 193.39, we can quite easily today test that 200.66 high from last week. If we push through 200.66, 209.51 would not surprise me by the closing bell, where we could actually top out into later weeks. So this is an opportunity at 209.51, perhaps, despite the fact that we are bullish on the 2 to 3 month and 3 to 5 week time frame, 3 to 5 week above 180.62. You can fade that move at 209.51 for a few days anyway, possibly for 3 to 5 days. Once we test 209.51, the market could fall off, but it also could just as easily close above 209.51 in the coming days. And as I say, if so, then we are looking for something like this. Within just another week or two of activity, that 235.23 long-term resistance area remains a 2 to 3 month objective, able to contain quarterly buying pressures, possibly into later year, and if settled above, would represent a significant long-term buy signal for Tesla as we move into later year. I'm going to leave you with this chart, and I think that pretty much summarizes it for Tuesday's Daily Tesla Report. I'll be back again tomorrow with Wednesdays. Please check out wicketstocks.com. You won't regret it. We offer a 5-day money-back guarantee. So if you do regret it, you'll get your money back within 5 days. Just shoot us an email and tell us that you want to cancel your subscription. It's about as simple as that. You have a great day. I'll talk to you tomorrow.